Do our conversations about crypto have you wanting to do more with your career? Check out Fidelity, which has been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and also among the first to launch a Bitcoin exchange-traded product. So why consider Fidelity? Because they invest in their talent with continuing education programs and they invest in their technology, ensuring associates are working with the latest and greatest so that their crypto teams can continue to improve and evolve their product, staying ahead of the rapidly changing digital asset landscape. With Fidelity's iterative, scalable approach, built to meet today's increasing demands across the digital space and a commitment to developing innovative tools, there's never been a more interesting time to work in crypto and DeFi at Fidelity. Explore Fidelity Crypto Careers today. Go to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. And now it is on with the show. My guest today is Mitchell Nicholson. Mitchell is the founder of Sierra Labs, helping to build out Sierra, a new liquid yield token built to deliver the best experience across DeFi, CeFi, and TradFi as well. We'll learn all about this today. Welcome to the show, Mitchell.
Awesome. Thanks for having me, Andy. Pleasure to be here.
Pleasure to have you here, Mitchell. Let's do what we do at the beginning of the show. It would be super cool if you could, just quickly introduce yourself. We'd love to hear a little bit about your background. What have you been doing in the lead up to founding Sierra Labs?
Sure. Yeah. Basically was trained as an economist, got my master's in economics, worked as a central banker in the past life at the Bank of Canada, moved over to Woo, which is a crypto exchange based in Asia. Led their ecosystem team and really focused on user growth, liquidity and market makers, as well as the token and investor relations. And left Woo at the end of last year and basically started figuring out what I was going to do next. And that slowly led to working with the OpenTrade team and founding Sierra, which I'm excited to talk a lot more about.
All right, well, let's do exactly that. So just start with the broad brush strokes, the big picture vision. Yeah, what is Sierra? What are you guys doing?
Yeah, so super bullish on the general idea of stablecoins like Tether and Circle. I think they're a really innovative product, probably the most innovative product to come out of crypto in terms of actually benefiting real users and not really purely speculative use cases. But there's a big kind of issue, I would say, with stablecoins being that the issuer of the stablecoin, so like Circle or Tether's company, retains all of the yield that's generated by the reserves. You start to see this trend with a couple other projects where they have a liquid yield token, as we like to call them. So think like Athena's USDE or Maple Finance's Syrup USDC, where they have a reserve portfolio backing the liquid yield token, and that portfolio of reserves generates yield in some fashion. And then they pass along the yield to the end holders of these liquid yield tokens. So that's kind of an emerging phenomenon or kind of industry trend, I would say, over the last year or so that's really taken off in the last couple months. And that's really where Sierra kind of lives as well, I would say, as a liquid yield token where holders kind of benefit from holding it and passively earn yield from the portfolio that backs Sierra.
And give us a sense, Mitchell, of where you are in terms of, I guess, the product rollout. Where are we in terms of the roadmap, as it were?
Sure. Yeah. So since maybe late Q1, early Q2, we started kind of ideating and building out the framework of what the project would look like, and then started really diving into how it would actually be built. And then coming into the last couple of weeks, we've just completed our smart contract audit, and now we've actually deployed the protocol onto Avalanche, which is the home chain for the Sierra protocol. And now we're just doing last bits of internal testing, and we anticipate to have a full-scale public launch come end of October of this year.
Exciting. Okay. So you're positioning Sierra as, the best risk adjusted yield. So how are we defining best risk adjusted yield? What are the metrics or benchmarks we're looking at here?
Yeah, I think it's a little bit amorphous, and there's a couple of projects trying to claim something similar. And since we've kind of started, we've also moved towards user experience, best user experience as well. But within the context of risk-adjusted yields, the way we think about it is that there's a variety of different ways to earn yield in crypto, actually both from what we call kind of real-world assets, treasuries, commercial paper, those kinds of things, as well as DeFi and CeFi yield sources. So everything from over collateralized loans, whether it's on money markets, so like Euler, Aave, Morpho, those types, or kind of peer-to-peer or protocol to borrower directly. That's kind of what Maple does. You have Basis, which is what Athena does, Pendle PTs, the market making vaults, so like Hyperliquid's HLP. Basically, you have a whole spectrum of different yield sources, and each one has a different set of risk factors or risk types. So credit risk basically is the counterparty going to default, if that's applicable. Liquidity risk, can I get my money out, and what kind of transaction costs will there be? Smart contract risk, all the way down to things like you could think of financial crime risk, like is there like sanctioned wallets using these platforms that I'm kind of commingling my money with, to regulatory risk, like is the yield source going to have some sort of regulatory issue in the future? So we've built a risk framework which looks at each of these yield sources across, I believe, 10 different risk types, and then scores them in a dynamic way. So we're updating that on about a monthly basis, unless kind of an event happens that we update more frequently. And we apply basically a discounting methodology. So just as a simple example, under collateralized lending through like a protocol like Wildcat should have more credit risk than over collateralized lending through the way Maple does it, or let's say through Aave or Morpho. And so with the metric of credit risk, we would basically discount under collateralized lending yields by a greater margin than over collateralized. And then we kind of aggregate across all of those yield sources, blend them together, and that is how we think about the best risk-adjusted return. We're not just like some other protocols which just optimize returns. We like to think about kind of the tail risks or issues that could arise in the different yield sources.
Got it. Very well articulated. Thank you, Mitchell. Look, you talked about this yourself, the kind of the rise of, so many different stable coins. There's kind of stable coins, there's yield bearing stable coins. Now there's liquid yield tokens, and you can get a sense that, of course, these are just going to explode in usage over the years ahead, simply for a number of reasons. I mean, the two big reasons, of course, is just simply ease of use, and of course, people looking to access yield. Simple as that. So some that you referenced, there's Athena, Ondo, Maple, and Syrup. So I know you've kind of talked about them. So how would you say Sierra fitting into this new asset class, and kind of, maybe even what's the main point of differentiation?
Yeah. I think just kind of on the pretext of what you said there, I was just looking at Stable Watch, which is a great platform to check these kind of things out. And um, closer to 5% than 10% of the total outstanding supply of stablecoins pass along some form of yield to their holders. So I think most would agree in the industry that stablecoins as a whole will increase a lot in terms of supply. And I think that ratio of yield bearing assets to overall stablecoins should also increase a lot. So yeah, I think you're totally right that it's a vertical that'll grow a lot in the future. In terms of what differentiates us, I think just as a preface here, Sierra is not a stable coin. It'll appreciate over time in value. We don't kind of think of it as something pegged to a fiat currency like dollars. It's something that floats in value and increases over time as yield accrues. In terms of what differentiates us, I would say there's basically three major things. Um, One is user experience. So some of these projects are really just focused on earning yield basically, and just kind of holding the token, sitting there, maybe collecting some points or airdrops. For us, we really think of utility as a differentiating factor. So what can you actually do with these tokens? And I'm not just talking put them in Pendle and create some Pendle PTs and YTs and speculate. I'm thinking using them in a lot of the same ways that you can use stable coins today. So um, trading collateral on exchanges, integrations with consumer applications. I'm really big into sports betting in the NFL, so I hope to be able to wager in Sierra on some gambling platforms in crypto as well. Um, the second thing is how we think about yield. So most protocols have a singular source of yield. So going back to Athena, they generate it basically with basis, so capturing the funding rate on perpetual futures. But they also technically have RWAs if that funding rate's really low, which is basically the treasury rate. But generally speaking, there's one source of yield for Athena, which is basis. In the context of Maple, you have over collateralized lending direct to institutional borrowers. Resolve is similar to Athena with their USR token and basis. What differentiates us is that we have a reserve management strategy that's quite flexible in that we can allocate to different yield sources. As I mentioned before, over collateralized lending, under collateralized lending, different forms of investment grade real world assets, as well as more unique things like Pendle PTs, basis. Um, there's also kind of more bespoke yield strategies that we're looking at as well. And so to summarize this part, I would just say having a very flexible reserve management strategy that can respond to changing yields and market conditions, that can add new yield sources in. It's to me, it's kind of the future of all these types of tokens. I think having only one option really constrains the project in terms of the yield that they can generate, the risks that they're taking, and having a very flexible mandate and being able to evolve over time, I think is unique for us, and also a more dominant strategy going forward. And the last one's really around transparency. We're really big on transparency and letting users make informed investment decisions with regards to holding the token and how we communicate more broadly to users. So we have a transparency dashboard that we'll unveil with the mainnet launch next month. And users will be able to see the different yield sources, how much each yield source is generating in terms of APR, as well as the allocation of reserves to each yield source. And that's available in real time. It's also available historically in the UI and available to download as well. And I think having that high degree of transparency really kind of sets the industry standard in terms of how liquid yield tokens should operate and empower their users.
Yeah, very well said again, Mitchell. I guess be worth just digging into how you feel about, I guess the risks, right? Because it's very easy for different projects to offer a certain level of yield, but how sustainable is that across the long term with the bull and bear markets, different phases of the market cycle, black swan events that can happen. This is the kind of stuff that does happen in crypto, as you'll be only too well aware. So how do you kind of think about keeping things stable, as it were, and keeping those yields sustainable, but given that kind of volatile backdrop?
Great question. And then just for context, I've been in the industry kind of as a more passive retail user since 2017, and more professionally since probably 2020, early 2021. So lived through FTX, 3AC, Genesis, Luna, kind of the whole gambit of last cycle's blow-ups. I think general principles that maybe we abide by that maybe some other protocols don't as much is employing leverage. There's no leverage in the portfolio of reserve assets for Sierra, whereas some protocols will employ leverage, and that has a higher chance of drawdowns or material losses. Um, the other kind of threshold I think that's important is smart contract risk. So we're very conservative in the types of assets that we or types of yield sources that we deploy the reserves into. And so you may be able to get a higher yield doing some looping strategy with like a third tier money market on a second or third tier chain, but you're really stacking many different forms of smart contract risk. And I think um, while bugs in DeFi are maybe a bit less common than they were in 2020, 2021, they still are a high potential for losses for these types of projects. And so avoiding leverage, being really prudent in the types of yield sources that you use as a liquid yield token are probably two of the most important strategies to avoid uh, losses on the reserves. We don't have a ton of information we can share just yet, but we're also working on an insurance vault a part of the protocol, um, which at a high level creates effectively like a layer of protection for the average Sierra user. And that should be rolling out in November, December of this year. And that should also kind of insulate the average user from smart contract risk and other kinds of losses as well, up to a reasonable threshold. And so that's another part of the protocol that I'm excited to work on more and refine and launch, like I said, before the end of the year.
Thank you, Mitchell. All right, well, look, as we start to finish up just this part of the podcast, for people that want to learn more about what you're building at Sierra, maybe be some of the first on board, the first to get involved, who are the different types of people that could potentially be involved? What should people do? Where should they go, Mitchell?
Yeah, great question, Andy. So simplest thing you can do is go check out our Twitter at Sierra is Money on Twitter. Our website, sierra.money. We have our docs there as well, which you can read upon. And we also have a blog, which outlines a bunch of different articles that you can learn more about as well. We'll have a Telegram community channel up by the time the protocol goes live. So you can join that and ask questions and hang out as well. Listen closely to this podcast. I hope this is educational for you as well. And then I would just keep an eye out for a series of announcements on Twitter where you'll learn more about what we're building and some of the innovative features. And yeah, you can check out my personal Twitter as well. It's WR_crypto. And I'll be posting about Sierra there a lot more as we go live.
Awesome. Time then to go to a very quick break, and then we'll come back. We'll have some fun. We'll finish off by running Mitchell through the very famous Crypto Conversation Hot Take round back in one moment. And boom, we are back, and I'm with Mitchell Nicholson from Sierra Money. Building out the Sierra Yield token. So that is going to be an exciting project to keep your eye on in the months ahead, folks. Mitchell, I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
I'm excited. Let's do it, Andy.
Let's do it, Mitchell. I'm just going to run some questions at you, and I want you to just give me your kind of rapid fire, kind of hot take style answers is what we do. Let's see what you have to say. Question one for you, Mitchell, is very simply, where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
From a personal investment philosophy, I'm a Bitcoin mostimalist, let's say. I really like Bitcoin. I think it has a certain appeal to institutional investors as like a digital gold. And yeah, I think there's other tokens that are also exciting, particularly ones with cash flows to token holders, but those tend to be few and far between. So yeah, for the most part, I think the simplest thing you can do, which tends to work out quite well, is just own Bitcoin.
Yes, indeed. Hard to argue with that. All right. Well, what would you say then, Mitchell, is your firmest conviction crypto opinion?
That's a great question. I think we still are early. It's easy to get caught up in the insular crypto Twitter where everyone's actually so in the weeds that it feels like you're late to everything. But then you kind of take a step back and you look at the broader trends, like I said, around stable coins or now tokenization, and even just the fact that like nation states are adopting crypto. You have DATs now coming to market. Um, I think putting the prices of things aside and just looking at adoption more generally, it's a great time to be in crypto. I think just contributing to the industry, building, it's a really fun time to be here, and there's a long way to go.
Yeah. Very well said. All right, look, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, look, anything you like here, Mitchell, but I guess, Sierra money, yield-bearing tokens, the stablecoin economy, what does it look like in 10 years' time?
I think it'll range from banking the unbanked and empowering people around the globe, giving access to dollars, giving access to saving products, really pushing TradFi to um, offer a better suite of products to a lot more groups of people. Basically, now there's a clear alternative to either opt out or just save your money elsewhere and build wealth on chain. And so I think that's one aspect. Two, I hate to say it, but it feels like the rise of speculation and all this sort of speculative activity that people do, not just in crypto, but with sports betting and gambling and stocks. It's probably only going to increase more and more. So I imagine you'll see better and better user experiences on that side of the market, which I'm a little less excited about, but I'm sympathetic to why it exists.
100%. All right. Another way of thinking about this is a quote by William Gibson, who said that the future is already here. It's just not evenly distributed. With that in mind, Mitchell, can you think of an example of the future being here right now, but most people aren't aware of it?
I think just how easy it is to use solely DeFi primitives on chain and build really compelling products and services. I mean, you just look at Aave itself. It's like the 35th largest bank in the world in terms of deposits, and it's entirely smart contract code. It's very lean now. It doesn't really need to be updated in principle. So yeah, I think like having institutional grade smart contracts that um, offer real valuable services to hundreds of thousands, if not millions of users, they're here today. And I'm really excited to see where we are in a few years, let alone a decade from now.
100%. And it brings us nicely to the final question, which is very simply, what is your favorite science fiction book, film, or TV show?
Some people may hate me, but I'm not a huge science fiction guy. Let me think for 1 second here. It's a bit of a hard one. I guess I found Star Wars as fun as a kid growing up. I thought that was kind of interesting. I hate to say it, but I think this conversation right now has just made me realize I got to get back to being a kid at heart and enjoying science fiction more. I've gotten really into podcasts and biographies and stuff. So that's my takeaway, Andy. It's time to pick up the Dune books or things like that and start enjoying fiction again.
Yeah, for sure. I mean, there's no problem with just saying, yeah, you enjoyed Star Wars when you were younger. I did myself. But, oh, good, Mitchell. Hey, this was a lot of fun. Thank you so much for coming and spending some time with us today. I guess just to close it out, Mitchell, again, please do tell people where they can go to keep up to date with what you guys are building with Sierra, and yeah, shout out your X profiles, etc.
Sure. Thanks, Andy. Yeah, check us out on Twitter at Sierra's Money. Check our website out at sierra.money. Take a look at the docs, the blogs, the upcoming posts and announcements, and keep an eye out for our points program. There'd be an interesting way to participate in the future governance of the Sierra protocol and maybe earn some additional yield. So lots to keep an eye out for, and I appreciate everyone's time listening to the podcast.
Awesome. Thank you so much, Mitchell. All the best, and bye for now.
Thank you, Andy.